welcome to Need to Know, your weekly investment podcast brought to you by the experts at Coutts. I'm Sarah Muir, and I'm joined as always by David Broomfield, plus a special guest, Tim Ellison. More on Tim in a moment. But David, you weren't here last week. Actually, I did a really good, I thought it was very good, very interesting episode with Arian Wolstenholme, where we looked at Resnon Dom and all the changes that may or may not be happening around there. But you were on holiday, I believe. What were you up to?
Hi, Sarah. Hi, everybody. Yes, I was on holiday. I was in Porto, in Portugal, and nice. It was very good. It was very good. A little 5 days with the family. And as I was telling you, I was sitting there by the pool, looking out at all of these port houses, hundreds of years of history, and some unsurprisingly classic, very English names.
Osborne.
And
no, that's Sherry, isn't it?
Coburn, Taylor's, Wares, all of these great names. And I thought to myself of that very long history, and I started thinking, well, maybe we should talk about wine and wine as an investment, as a long-term asset class. And, you know, almost by definition, these houses have been there for hundreds of years. This product has been a commercial market, something you can invest in for many years. And I thought, let's think about that in the context of all alternative investments. Yeah. And then let's think about what the future might hold for wine.
Yeah. I mean, this is perfect because we have covered alternative stores of wealth, investments, whatever you want to call it, because we did an episode not that long ago with Amelie Serrado from Christie's where we looked at art. We've talked about Wimbledon debentures. We've talked about Birkin bags, one of my favourite subjects. But so a really good idea, which brings us very neatly to why we have a special guest, Tim Ellison. And I hope he doesn't mind. I'm going to introduce him. He's got 50 years experience in the hospitality industry. He's a chef de cuisine and a sommelier. Forgive my French pronunciation. And also he's general manager of one of the, I think, correct me if I'm wrong, Tim, it's one of the platinum clubs. It's the very prestigious Vancouver club. And you lecture all over the world on the subject of wine and wine appreciation. Welcome to Need to Know, Tim.
Thank you very much, Sarah. Thank you, David. It's great to be here.
Okay, now, Tim, this is your debut. There is a rule. I am very strict with the rule, and that is that we cover 3 different aspects of a topic or a theme. So because you're the guest, you get to have 2, and David, you get to have 1. So I think perhaps, David, we'll come to yours in a minute because I think you're going to go first. But Tim, when we talk about wine as an investment, what were the 2 aspects that you wanted to focus on?
I think 2 really important aspects of wine as an investment is what's happening in the market and market trends, as well as climate change and the effects of climate on the production of wine looking forward into the future.
Yeah, that sounds really good. Okay, David, so let's kick off with you then. What do you want to talk about before we get on to the trends and climate change aspects of wine?
Okay, thanks, Sarah. So I'm going to give everybody the analysts, the economists' view of wine, which is not really what wine's about, is it? It shouldn't really be about, numbers on a spreadsheet. It should be about clinking glasses and enjoying yourself. But look, everyone who listens to this podcast has got a vested interest in the wine market. They may not know it, but we as a nation have got a strategic wine reserve, the government wine cellars. Yep.
Really? Okay, I didn't know that. This is different to the wine lake, yeah? This has nothing to do with the European wine lake.
It's nothing to do with the European Union. It is the government wine cellar, which ostensibly is wine used for official, diplomatic and other government hospitality events. The government, just to put it into context, government spent about £27,000 last year on buying wine. Bought
£27,000? That doesn't sound like very much.
Wow, it's not very much, but they consumed over 14,000 bottles of wine last year at the taxpayers' expense. But importantly, there was a review in 2010, and it made quite a clear statement of direction that the wine cellar should be self-financing. So we, as a nation, we invest in wine on behalf of the taxpayer and the government wine cellar. And when I looked at the market value of our strategic wine reserve, they spent about £800,000, and that cellar today is valued at around £3.6 million. So whoever it is that runs it is doing a pretty good job of investing in wine. And so I think that, combined with my daydreaming in Portugal about the wine market, kind of made me think, well, let's look into the asset class, because that sounds pretty compelling, right? 800 into 3.6 million.
I would say that my question, and this was a question the discussion we had with Amelie from Christie's when we talked about art, is should we talk about wine as an investment in the classical sense, as in you put in X and you expect to get X plus Y after a period of time, or should we look at it as an alternative store of value, and the investment aspect is probably secondary to the pleasure of owning and drinking fine wine?
Yeah, we'll look at the numbers, shall we? I mean, I always like investments where there's no risk. You might go down to the cellar and drink them. But when we look at wine, actually that process is pretty good for the investment. The more supply that's taken off the market, which inevitably happens over time, the better for the price. So let's look at the numbers. Okay, so I asked the team here at Coutts to look at the data, and there's an index that's publicly available. People that listen to the podcast can go and check it out for themselves on Bloomberg. The LiveX index, it tracks the 100 most sought after wines that are on the market. In fact, one of those wines is in the government wine cellar, the 1961 Chateau Latour. It tracks the prices of those 100 most sought after bottles of wine. And if we look at that asset class and we compare it as an investment to things like gold, things like classic cars and equities, it's actually quite compelling. The academic research shows that over the last 100 years, that wines actually outperform bonds, net of all storage fees and net of costs. It hasn't outperformed equities.
No.
But then when I asked the team here at Coutts, I said, okay, let's model this like we would model a traditional asset class. You see that it has very low correlation with equities. So let me bring that to life for you. 2008, wine sold off during the financial crisis. 2022, which was a difficult year, very bad economic backdrop. Everyone will remember monetary policy, interest rates were going up, economic growth was slowing, bad year for markets, very bad year for markets. Wine did very well. Wine held up. Yeah. And so it's what we call uncorrelated to equities, which as an investment, as an asset class, that's quite a compelling argument to hold something that's not related or correlated with the rest of your portfolio. Tim?
It's interesting that you say that, David, because as a matter of fact, wine prices peaked in 2022 and enjoyed significant increase well into the double digits during that period.
Yeah. I guess my question would be, though, is the price of wine not highly volatile? Because it can be driven by scarcity of a particular type of wine or a particular sort of vineyard or winemaker, because of, I'm going to talk about climate in a moment and how that's going to impact wine in the future. But you get a bad year, which is great, and then the price of that wine from that year will do very well. But does that not bring in volatility? I mean, Tim, your thoughts on that?
Yeah, I really, and David alluded to this earlier, wine is a long-term and stable asset. If you look at averages, you see 10% double-digit growth year over year. And David alluded to this. It's over the past 100 years. So it is a very, very safe place to put your money. There's no doubt.
Okay. But certainly...
Yeah, I mean, Tim...
Yeah, sorry, yeah.
Sarah, I was going to say, if you look at the data, I mean, Tim's right. I mean, let's keep this in the context of other alternative assets. If you look at it compared to, say, gold, obviously gold's a much bigger market. Okay, the investable fine wine market numbers are difficult to find, but it's around $60 billion, $62 billion. Gold is a $5 trillion investable market. But nonetheless, look at the data. That question you asked about volatility, it behaves pretty similar to gold. Its maximum drawdown is pretty similar to gold, and its behavior during market stresses, remember I said it's uncorrelated. During 2015 when gold struggled, so did fine wine. But there are periods, like Tim said, in 2022 where it holds up very, very well.
You raise an interesting point. You mentioned the year 2015, which was a tremendous vintage for those who know wine, and you referenced the Live-X. If you look at a 2015 Chateau Margaux, it has actually appreciated 91.5% in the last 5 years. These exceptional vintages produce exceptional wines, and the year-over-year growth on them definitely outstrips your average market performance. So when you hit the right year, you hit a good vintage, you can do very, very well. 2008 in Champagne is also showing tremendous returns for investors. Up over, Dom Perignon, 2008, in the last 2 years is increased in value 82% over the original purchase price.
How much of that is down to the critical acclaim of wine experts? So to have a subjective opinion on this is a great vintage. And that obviously must have an impact on how attractive a particular year is.
Yeah, Sarah, absolutely. The pundits and the critics, they definitely get in behind wine vintages. And you look at the famous 1982 vintage in Bordeaux, that made Robert Parker, because when other pundits and critics, Stephen Spurrier and Hugh Johnson, Jancis Robinson, which the UK market will be familiar with, they kind of downplayed that market. Robert Parker said, no, this vintage has tremendous potential, got in behind it tremendously, and lo and behold, what critics say does carry weight. And the good news is that their reputation rides on this. So at no point in the future are they going to, go back and look over their shoulder and say, actually, we were wrong, because that will call in question everything else they do moving forward. So you can be assured that these vintages that are very highly rated by the critics will continue to enjoy their support and promotion well into the future.
Yeah,
I think that's really interesting. When you look at this like an analyst, when you look at the asset class, okay, and I'm not, Tim's the expert here. I'm the generalist, and the way I look at things is the way you'd look at, say, a company. Okay, so if you're thinking about a company, you're looking at, its firm level characteristics, its earnings, its cash flow, its dividends, things like that. And then, of course, you've got these kind of macro factors that drive performance. That's like the global economy, its economic growth, its inflation. What Tim's mentioned is sort of the firm specific characteristics of wine, the vintage, and the reputation of the producer. Then you've got weather conditions. But I think the really interesting thing about wine that makes it very different to other asset classes is this idea, two things. It's this thing called a Veblen good. Okay, so that means that as price increases, demand actually increases for the product. So that's on the demand side. And on the supply side, you drink this stuff, right? The supply is naturally constrained and diminishes over time. And these are good, favorable, very long-term conditions that are stacking the market in your favor. And I suppose as I finished sort of talking about my section about the kind of the analyst, the financial analyst view of wine, I keep thinking about this demand question, because last time I was on the podcast, we talked a lot about demographic changes and how Europe's getting very old and Africa's very, very young. And I thought, well, the question that I want to direct at Tim is, well, what does that mean for wine? Are we going to be consuming it in the same way in the future as we were today?
That's a great question, David. And the fact of the matter is that when you look at the younger generation, the millennial, and I'm talking in the UK, the youth market, under 35 in 2011, they were responsible for 46% of the consumption. In 2021, they were only responsible for 28%. So, that's down just shy of 20 points, and it is trending down. The good news is, if you look on the other side of that, the UK market, aged 55 and up, in 2011 was consuming 38% of the wine. In 2021, it's actually 56% of the wine, and it's trending up. And everybody knows that, even though the boomers are getting a little older, we have the most dispensable income. And the other side is we have free time. We can consume our wine. We have an opportunity to travel, to visit these vineyards, because wine as an investment is certainly, a monetary investment, but we like to call wine an investment of passion. This is something that fulfills your life and great joy. And to your point, it's an ever diminishing quantity because, of course, what do we like to do when we get a great bottle of wine? We love to share it with our chums. We like to drink it, show off a little bit. So the quantity, the volume is ever diminishing, which drives price and scarcity, and it just makes these investments more and more compelling over time.
Okay, so what we're saying then, in a nutshell, as far as your point of view is concerned, David, is we should consider wine seriously as an alternative asset class. As far as comparing it to, say, how bonds perform, it's attractive, and it's not highly correlated to equities. Is that fair to say?
It's fair to say. I mean, that's a very factual interpretation of numbers. I would think of it in the context of classic cars, art, and other similar alternative investments. Remember, it's a very small market, and it's relatively difficult compared to some of those other markets to invest in. Relatively difficult. I mean, you can all go and buy wine. That's a pretty freely available good. But what we're talking about here is fine wine, of which the market is actually quite small, very restricted. And when I was looking into this, just to sort of bring it to life, I reminded myself of a 2009 Economist obituary column of former president of Gabon, Omar Bongo, who was a huge consumer of fine champagne. I'm not suggesting for investment, although his personal investment cellar was allegedly 181,000 bottles of champagne. But during his reign, Gabon, apocryphally or otherwise, consumed so much champagne that it actually appeared in the national accounts. And apparently the capital city for a few years had the highest champagne consumption per capita in the world. And so what I'm trying to say is that this is a small market that is relatively difficult to get into outside of a specialist broker. I mean, there are some funds that resemble private equity funds that can get you exposure. So I think you've just got to be mindful of, excuse the pun, the illiquidity of the investment and some of those frictional costs. But as far as it behaves as an asset class, it's pretty compelling. It's not correlated and it's naturally scarce. Tim?
And you can drink it.
Indeed. David, you hit the point right on the head. And it is, there is a little bit of sophistication and discernment that will add to the luster and the value of any wine-related portfolio. You referenced champagne. Sparkling wine is the fastest growing category in wine consumption today. Prosecco is largely responsible for that, and that's kind of at the low end. And if you look at champagne, of course, this is sparkling wine from France. 5-year returns 4.7%. In 2023, when the market was a little bit shaky due to people's concerns about, recession and inflation, while other categories showed negative returns, champagne continued growth, up 3.6%. But if you take, and you have a little sophistication in your buying, if you take the Champagne Top 50, which does come from the LiveX forum, you'll see that has over 5 years returned 45.3% on original investment. So champagne is a very, very compelling category. And I mean, the good news is that when you make a little good return in champagne, well, you have something to celebrate it with, don't you?
Exactly. But you'll be eating into your investment then. Okay, well, that brings us on very neatly then to Tim, to your first point, which is what are we seeing in markets at the moment? What are the trends we should be watching?
Indeed, and thanks very much for that, Sarah. When people think about wine and wine investment, typically the Bordeaux and the first growths are the ones that capture the most imagination for people. But the fact of the matter is that Bordeaux and the Bordelais are very mercantile. They're very clever. So if you have a Bordeaux vineyard and it's 50 hectares and you've got a Grand Cru Class A from the 1855 classification that you've been skating on for coming up to 2 centuries, you can play on that reputation. And as long as you are purchasing vineyards that are contiguous to your winery, therefore, or attached to your winery, you can actually grow your Bordelaise vineyard, which means you could go over the hill from the Gironde and you could be on lesser quality soils. And the fact of the matter is that you get the reflected glory in the same classification of those Bordeaux, whether it be first or second growth. And the Bordeaux category, if you look in 2023, it was actually down 5.5%, and really has enjoyed some good returns. Now, Latour, Lafite, Haut-Brion, Margaux, Chateau Mouton Rothschild, these are all solid investments and will hold their value in the long term. But because of the ever-expanding nature, therefore ever-increasing supply of these vineyards, they're a little bit of a moving target. For myself, when I think about wine investment, of course, Champagne, moving with the big houses is absolutely the way to go. But Burgundy is really where it's at. In the 1500s, the Cistercian monks, they delineated and identified finite growing regions, and they're divided into Grand Cru, Premier Cru, and then there's the AC, which is the wines that are produced from the overarching region. But they can provide exceptional returns. If you look at the Burgundy Grand Cru, 3-year returns 16.3%, 5-year returns 10.8%. Premier Cru, which is actually an even more compelling category and a much more agreeable price point for entry, outperforms the Grand Crus with a 3-year return of 16.3 and a 5-year return of 11%. And for myself, these Burgundian wines, they provide, number one, incredible drinking value. I mean, really, if you have any disposable income, you owe it to yourself to experience Burgundy at its finest. And I think about producers like Domaine Romanée-Conti, Leroy, Armand Rousseau, and Lefebvre, which can provide exceptional drinking pleasure and good returns. As a matter of fact, the Lefebvre Batard Montrachet in 1 month returned a 45% return. So that's very exciting. If you're looking in Bordeaux, for myself, I always look beyond the first growths. David.
Yeah. Sorry, I was just going to jump in first. Talking about Burgundy, so is it not fair to say that? So if I talk about the en primeur season, we're talking about Burgundy, aren't we? 2022 prices jumped sharply. Did that not deter quite a lot of collectors and investors? Is the market a bit frothy, I guess is what I'm saying?
I mean, it's a lot of it is dependent on supply, and we had a couple of bad vintages, but things are turning around. Prices did peak in 2022. 2021 yields were down. The climate was against them, and small yields forced producers to raise prices in order to pay the bills. 2022, we're looking at normal yields. Prices are stabilizing. 2023. Yields are actually up 12%, which is going to put some pressure on the producers to give back a little bit in lower prices. But in the long term, you'll get it all back because, yields are a thing, and you don't want your vineyard to yield too much wine because, of course, a vine will naturally overproduce, and these are controlled artificially through farming, viticultural practices. And it's in the producer's best interest to control the amount of wine that comes from their fields. Therefore, you'll never see, it's not like striking a big gold vein where there's all of a sudden a flush on the market of all this. There will always be some degree of regulation.
So I've got a question. So we talked a lot just now, you have, Tim, about the supply side. What about like the demand? You mentioned millennials earlier, but the thing that always anecdotally comes up in conversations with people about wine is demand from China, demand from emerging markets, demand from overseas. And when you look at those 100 wines in the Live X, you see obviously Bordeaux, Burgundy. To what extent it comprises of France versus Italy? Are there Italian wines in there? And then if so, does that, is that what these overseas investors are looking for? Is demand still coming from China? Is demand still coming from these regions?
Absolutely. China, a huge market. It was actually the top third, but they are suffering from a little bit of an economic slowdown, but they're still well placed in the top 10. The top consumers are the US, France, Italy, Germany, then China, followed by the UK and Spain. And China has slipped from the third position down to the sixth now or fifth now. But, people that have means, they do have disposable income. And I mean, if there's two things every human being needs to do, it's eat and drink. And if you have any degree of resources, you want to eat well, and as you want to drink well as well. So I think that we'll continue to see a market for this. I alluded to the age 55 up. Really, this is kind of getting the tag end of the boomers. They've got disposable income. They want to drink wine. And I was out for lunch today, and my guest was saying that he was on a ski vacation, as a rather old chap. And I was like surprised that he skis. He goes, "No, I'm not skiing. I'm spending my kids' inheritance." So you see a lot of desire for people to take their hard-earned money and reward themselves for their many decades of work. And fine wine is absolutely the way to do it. That's why you see that age group consuming over half of the fine wine in the world, and it will continue to trend up. And you don't have to be fit to drink wine. I mean, you can have your butler pull the cork, and it's very easy to do.
On the subject of sticking to the subject of wine as an investment, how much, I don't know whether perhaps you can answer this, Tim, and perhaps David, you've probably got something to say about this as well. Higher interest rates have perhaps potentially made wine less attractive as an investment. Not talking about the pleasure of drinking fine wines. Has that had an impact? And if, assuming we're going to get central banks are going to be cutting rates this year, could that likely then feed into more interest in wine again as an investment?
Well, why don't I go first? Because the analyst approach to this would be to try and decompose, well, to what extent does liquidity drive the wine market? And the answer to that is, again, it's a bit unclear. It goes back to this idea of wine not being correlated with other traditional asset classes. We know that during COVID, when people were locked at home, they had high disposable incomes, excess savings. We know that people spent a lot of money on wine. You can see that in the data, and you can kind of see that in the chart as well. You can see the pop the fine wine market got during those lockdown years. But that's not always the case. So the cost of living crisis, as it's termed, the extent to which that would affect the individuals that are actually investing in fine wine. You're talking here, as I said, in the government wine cellar, the 1961 Latour goes for about, I think Tim will correct me, about £9,000 a bottle. This isn't something that someone who is short duration and having to increase their mortgage payments. This is not typically the go-to bottle of wine for someone who's having an income squeeze. Tim?
Yeah, absolutely, David. And I mean, referencing 61, there was a tremendous winter freeze over the winter of 60-61. Yields were down 1/3. The 61 is the holy grail, especially the first growths on Bordeaux, will always be a hallmark vintage of the previous century and will hold its price and continue to hold its price. And, it doesn't matter whether you're holding a first growth or any one of the super seconds. If you hit it right, and that's the thing about wine, is that it's an opportunity to not only invest your wine, but also to get a little bit of appeal, because it's not just a matter of going out and buying wine. You need to know your producer. You need to know your vintages. It takes a little bit of sophistication to really get it right. And when you do, the rewards are tremendous, because your fellow investors in that field recognize your buying prowess and sophistication and reward it with ever increasing prices. You can't go wrong with investing, especially, as I say, when you get it right. You want to talk about getting vintage right. If you're in Burgundy and you're considering a Grand Cru like the Loire Richebourg, the 97 vintage has seen a 1,050% return in the last 10 years. So you get the vintage, you get the producer, you can't fail to win. And because people know and want these wines, they are in finite supply, ever decreasing. The value of them only increases. The mystique, the legend. I referenced the 82 vintage earlier. Last year on my birthday in December, I opened a 6-liter of 82 Montrose, what I call a super second. And, it was an amazing experience that I got to share with my friends. And, And I mean, they all couldn't believe I opened the bottle. Not necessarily the best investment in me terms in monetarily, but enjoyment and, dare I say, snob appeal. It paid in dividends. It was really, really great.
Okay, I feel I need to strike a note of caution here, because you're presenting this as wine is absolutely a win-win situation, can't go wrong, but it's about what you invest in, isn't it? So you've got to really know your stuff, or have someone acting on your behalf who knows their stuff, who knows which vintage to buy, because there could be a big difference between a 62 and a 63.
Well, I'd just like to point out 63 is the year I was born, which was an exceptional vintage as well. So you do get a couple of chances every decade, but no, you're absolutely right. But the good news is that you've got long established firms. I think here in the UK, Berry Brothers and Rudd is a great example of sophisticated wine buyers that will work on your behalf and to help you identify top wines and from top vintages. More importantly, is they have access. And not just anybody gets access to these wines. These are very, very small allocations. You look at a winery like Chateau Petrus, the famous right bank producer of Merlot. You just can't get the stuff. It's very, very challenging to get a case or two allocation to build your cellar. So having access and being able to source these is really, really key. I've been buying wine and studying wine since the 80s. So, I do enjoy that opportunity, but for sure, a little bit of expertise, if you don't possess it yourself, is very important. David.
So you talk about long established firms, and this country's not short of a few of them. You've got these long established chateaus in Bordeaux, Burgundy, and that the third question that we want to discuss is, like, what's the future hold for these firms? That 100 years is ostensibly a long time, but we know that the pace of climate change, the pace of social change is accelerating. Are they going to be here in 100 years' time, or are they going to be somewhere else? And what does that mean for other regions like California?
Yeah, that was going to be my question, which does, as I say, very neatly bring us on to your third point about sort of climate change and demographic changes. Is at the moment, we're talking all about Burgundy, we're talking about Bordeaux, we're talking about Champagne. The future, do we see other winemakers coming in, other wine regions coming in to challenge us investment wines?
Yeah, that's a great question. If you look at studies, there's the potential for coastal and lowland regions disappearing by 2100. They're predicting up to 90% due to drought and heat waves, these areas becoming unmanageable for growing grapes. But the good news is, and I mean, I think about the UK, where maybe 30 years ago, too wet, too cold to reliably ripen grapes. Now through Sussex, you're seeing a number of quality producers, Nye Timber comes to mind, making champagne-like wines. Of course, they share the same chalk soil that runs from the Paris Basin under the Channel all across southern England. They have access to the great material, the clones that have made Champagne famous. Not a problem to get a Frenchman to come over and visit from time to time and give you the benefit of their expertise. So the good news is that you can adapt, and you can adapt through different rootstocks, you can adapt through training systems, but climate change is a real issue. Drought, fire, flood are negatively impacting the traditional growing areas, but when you look at that conversely, and it's not necessarily anything to celebrate, but the fact of the matter is, if it's harder and harder for these classic regions to produce wine, they'll only get scarcer and scarcer. And I've had wine going back to the 1800s. You look at Thomas Jefferson's wines that he was getting from Bordeaux in the 1700s, still being actively traded on the market today, going for into the seven figures. So as they become more and more scarce, they'll become more and more valuable. And honestly, 100-year-old wine, 150-year-old wine still gives great drinking pleasure, and it's a great opportunity to celebrate history and these important growing regions over time. So yes, climate change is an issue. but the industry is adapting to the conditions that are happening. And we are employing things like cover crops in the vineyard in between the vine rows to retain water and lower temperature. We're looking at canopy management, which is the trimming of the leaves, creating more shade, reducing sunlight exposure to the grapes, and the experimentation with varietals that come from traditionally hot growing areas like southern Italy. You see Nera d'Avola and Teroldego seeing great success. And in Greece, the Assyrtiko is being planted around the world. Vines, French vines like Tannat and Syrah and Petit Verdot are being planted and are increasingly popular in making quality wines in these hot regions. They withstand drought, they hold up to disease pressure. And so we're seeing all kinds of different methods that winemakers are using to stay current and productive in the market. You can relocate vineyards. You can irrigate. In the old world, irrigation was always a kind of no-no. In the new world, it's not a problem at all. You look at areas like the Mosel Valley, where for years the south-facing slopes were planted in vines, the north-facing slopes were woodlands. Well, very slowly over the years, German wineries have been buying up these north-facing slopes, the idea being transfer the Riesling there, plant Pinot Noir on the south-facing slopes. It will actually improve their production and allow them to explore both the red and white wine market. Sarah?
Yeah, I was going to say, and I did read somewhere that I think Pommery and Tastinger have planted vines in the UK. Now, obviously, there's a lot of focus on the UK. I did read somewhere that apparently Britain is now the fastest growing wine region in the world because there's so much interest. And I know there's a lot of foreign winemakers that are coming in and buying. I don't know what your thoughts are on this, and perhaps the winemaking world because of climate change.
Yeah, I think that, I think about Canada. Wine grapes ripen reliably between the 30 and 50 degrees of latitude in the northern and southern hemisphere. And Canada was at the northern end of that. Our border with the US is at the 49th parallel. And now we're seeing wine grown in central British Columbia and areas like Lillooet and places like Salmon Arm. So we're able actually to produce these wines in new regions. The fact of the matter is this land has not been exploited. Vineyards are cheaper. The grape material, the equipment required, the expertise is all available. So we're seeing an ever expanding opportunity to explore new regions, which will create new opportunities. And think about buying, English sparkling wine. This is like being in Champagne 400 years ago. And there is a lot of upside as these wines gain notoriety. Their reputation increases. The industry becomes more adept in yielding the best. I'm very bullish on English wine. And as a fact, at the club in Vancouver, British Columbia, we carry a number of English sparkling wines to great success.
Actually, that was going to be my next question. How long do you see before English sparkling wines are viewed in the same way as top-end champagne as far as an investment, a sort of proposition is concerned?
Yeah, I think that you've got about a decade to go. People need to get used to the idea that the English can make fine wine, and the proof is in the pudding, as it were. I think that as the producers become more skilled, become more in tune with their climate, they will continue to build strength on strength on strength. And I think that it's a solid investment right now and will only yield ever increasing results and returns over time. So within a decade, you will see English sparkling wines on the finest tables around the world.
Yeah, David, we were talking about, obviously, we've discussed the sort of impact on real estate prices of this shift by a lot of growers to England. There's a big demand for wine growing land in England. I guess arguably it could be seen then as that kind of investment could almost be a kind of hedge against rising temperatures in Europe, couldn't it?
Yeah, and there's it's within the context, I think, of sort of natural capital style investments. You're quite right. I mean, there are unintended consequences of changing over the nature of land production from one industry to another. And I think that in the UK, it's slightly different to northwest France. The southeast of England is the most populous part of the country. Population density is very high, land value is very high. So at the moment, I mean, Tim will correct me, but the kind of people who have been investing in wine are passionate enthusiasts who want to create some legacy, and they're doing it for the love of wine. Could you build the kind of scale of commercial operation you would see in Australia or other regions? I'm not sure. I mean, Tim, what's your view?
Well, you raise Australia, and I mean, the fact of the matter is that they've decimated their wine industry by what we call the critter wines in the day, Yellowtail and the like. And they took a strong reputation that was developed by Adam Busby from the 1800s, and really they've kind of driven it into the ground. And now they're trying to recapitalize. But to your point, number one, you've got a finite amount of real estate. And we know that they're not making any more land, so buy land. But the other thing that I think is very compelling is that you have a close proximity to a major metropolitan market. People want to drink, they want to have fun, and if your transportation costs are reduced, you can get the wine to market. You can enjoy more margin. You've got a larger market. There's national pride. Londoners are going to want to show off English wines to their friends visiting around the world. That will only increase the demand, increase the reputation, drive prices higher. I personally, as I said, I'm very bullish on English wine, and if for people buying real estate in wine producing areas that have potential for vineyard sites, whether they're planted or not planted, I think that you'll only see more demand for those sites. In British Columbia, you go back 20 years, you could buy an acre in the Okanagan Valley for, you could probably get one for $1,000. Now they're $100,000. If you go to Napa, maybe in Tokelon Vineyard, you couldn't buy it. Or if you did, you'd be looking at $500,000 to buy an acre of land in that vineyard. So I think that England is well suited to take advantage of the shifting climate, of the warming climate, and the fact that they do have close proximity to the major metropolitan market. So there's a strong population that will provide the demand that you need.
So, and then presumably then, are we saying then, because obviously, if more of this wine growing shifts to England, and we could see a greater variety of grapes being grown in England, the really well-respected historic names in France, presumably they're going to end up probably producing less, which is going to have an impact on the price and is going to make those wines even more attractive, I guess, from an investment point of view.
100%. And as I said, Burgundy, that kind of defined area, and I mentioned a couple of wineries, you will see tremendous value. In Bordeaux, beyond the first growth, things like what we call the super seconds, Coste-Esternel, Montrose, Palmer, Pichon, Comtesse de Lalande, these wines are going to become more and more desirable. They've already been proven to have decades, if not centuries, of longevity to them. As a long-term investment, I think that they're a very, very stable and reliable investment. And so, the shift will make those less available, even more scarce. As we all know, scarcity drives price. The demand is always going to be there. People will be skating on this storied reputation. And when you hear about these wines, you want to try them, you want to share them, you want to possess them. And it's the natural result of collectors' desire to search these and get them at any price. And things like, Domaine Romanée Conté, Richebourg La Tâche, Grand Cru vineyards like Echezot are now trading for thousands of pounds per bottle, and that's not going to go down. The bottom's never going to fall out, and the people that search out and desire these wines, dare I say, will probably continue to have the resources to spend on them. With their scarcity, it will become even more prestigious to have them in your cellar. You don't even have to drink them. You just have to have them and show them off to your friends. And the fact of the matter is you'll have the reflected glory of your, prestige and snazz that you were actually able to not only discern what these top wineries, that you were able to access these exceptional vintages, but more importantly, even possess them. It's quite compelling.
Okay. And then I guess I feel we ought to, because we did say demographics as well, and you both touched a little bit on demographics. And David, the last time you and I were talking together, we were talking about changing demographics. How do we see the changing global sort of population? How is that impacting wine as an investment? What's happening to our sort of traditional wine buyers?
Number one, sure, millennials and Gen Z are consuming less alcohol, but I'll tell you this, they will grow up. And when I say grow up, I don't mean just in terms of years, but in terms of sophistication. And they'll be desiring these products. But then you look at other markets, India, Brazil, China, these are populations in the billions. And as their economies ratchet up and people find themselves with disposable income, they've heard about these wines all their lives. They're going to want to have them. It's like, fine art and luxury automobiles. Everybody's heard about a Lamborghini, not but everybody's been in one. The price of entry to get into a bottle of fine wine is much, much less than, say, buying a Duesenberg or an old Rolls Royce or something like that. So I'm bullish. I think that the market will continue to grow. I think as people mature, the millennials are going to get tired of drinking what we call the RTD, or the ready to drink, where you get some sugary drink in a can that you have on the beach with your friends, and they're going to want to sit at table, and they're going to want to have candlelight and linen and silver and crystal and fine wine and fine food, listen to Beethoven, surround themselves with art. And I think that the people are going to yearn for that degree of sophistication. So as they mature, that market will only expand.
Yeah, I think I'd agree. I again remember my take on this is through the lens of an analyst. The market is only a $62-63 billion market, and remember what I said, that's bigger than the classic car market, but it's in the same ballpark. Classic car market is estimated at being in the $50 billion range. So you've got a very small pool of these very exclusive wines that Tim has just described. And you've got a demand factor that's just so much bigger than that small pool. Because remember, we're not talking about the global wine market per se. We're talking about these 100 most sought after bottles of wine. But remember, before you all run out and go down to your local wine merchants and try and buy one of these bottles, getting into this market, storing the bottle. I mean, this is where Tim would disagree with me. I like my investments to be held by big global custodians and, have all the reassurance of regulation and government legislation. It actually terrifies me to my core, this idea you could put that much money in something that's perishable, a perishable good that's only held in a warehouse with one security guard. But you can do it. And actually, the cost, because full disclosure here, I'm not going to say invest. I procure various bottles of wine, not in the realm that Tim has just described. This is ultimately for my own consumption, and the storage costs now very reasonable. But if you do want to go and play in that market that Tim described, you can do it by owning the physical. And as I said, I think I touched on it briefly. There are funds out there. There are private equity style investments that allow you to take a notional ownership right in that fine wine. Relatively easy. The market's only getting more accessible as an investor. So remember, I'm not saying run out and buy wine. View it in the context of a diversified balance sheet and size it accordingly. The correlation aspect's very compelling. The diversification aspect is very compelling. The supply side constraint, as Tim's described, as I've described, very compelling. And if you believe in what Tim has said, the future demand landscape looks even more compelling. Tim, sorry.
Yeah, no, if I may, David, if there's one thing I have to say, I always like to keep my wine close at hand. As I alluded to earlier, everybody needs to eat and drink. So the next time you're thirsty, try drinking your gold portfolio. The one thing I want to say is when you are looking at investing, right now there's a real moment in time. The Champagne Top 50, as I said, up 45.3%. The 2008 vintage is rapidly being snapped up by discerning buyers. You see 2008 vintage champagnes from growers or the big houses like Dom and Roederer. You buy those now. You will enjoy tremendous returns. The Burgundy Top 50 up 22%. The best Italian wines like Masetta enjoying 30% growth in the 5-year period. You can't go wrong. The only thing I did want to say though, and David, and it's kind of sad, is that I hope you didn't buy any wine when you were visiting Portugal in the Douro Valley, because vintage port and sweet wines is the one category that is seeing a slight decline. But overall, the still, dry, red and white table wines are enjoying tremendous returns.
No, any investment I made whilst in Porto was promptly consumed in Porto.
So we're saying it's definitely an interesting alternative investment. Caution, you need to know what you're doing, or you need to engage someone that knows what they're doing. This is not for the sort of lucky amateur. And bottom line is, you can buy a wine, it should, or it often will appreciate, but you can still drink it and enjoy it as well.
Indeed.
I guess that I feel like I need to sort of strike a bit of balance here, because this is very, very pro-investing in wine. Thank you very much, Tim Ellison. It's been amazing and fascinating. And thank you for taking time out of your busy schedule, speaking at various, I think you were speaking at the Royal Automobile Club the other day, and you've been at the Athenaeum as well. You've been all over the place. So it's really great that you've carved out a bit of time for us. Thank you very much, David, for coming up with this idea. A reminder that the views expressed in this podcast are not intended to constitute investment advice, or wine advice for that matter, are accurate at the time of recording and are subject to change. As I said, thank you very much, David and Tim, for joining me today. Thank you for listening. Thank you for your comments, suggestions and feedback. It's always very welcome. We'll be back next week with more Need to Know. Until then, bye for now.